I don't think people understand the gravity of India's massive external debt and its far-reaching impact. India, a land of vibrant culture and burgeoning economic potential, stands as a prominent player on the global stage. Yet, even as India strides towards becoming an economic powerhouse, a shadow looms large: its massive external debt. As of the latest data, India's external debt stands at $663.8 billion at the end of March 2024, a rise of $39.7 billion from the year before. This accumulation of financial obligations to foreign entities has been steadily increasing, raising concerns about its implications for the nation's economic health and long-term sustainability. Understanding the reasons behind this growing debt, its impact on the Indian economy, and potential solutions are crucial for charting a path toward a secure and prosperous future for India and its citizens. The journey to unraveling this complex issue requires a deep dive into the intricacies of global finance, economic policies, and the delicate balance between progress and prudence. The reasons behind India's accumulating external debt are as diverse and multifaceted as the nation itself. One of the primary drivers is the country's ambition to accelerate economic growth and development. To bridge the infrastructure gap, India has increasingly turned to external borrowing to finance large-scale projects in sectors such as transportation, energy, and telecommunications. These investments are seen as crucial for unlocking India's economic potential and improving the living standards of its citizens. Another contributing factor is the country's persistent trade deficit, where imports consistently outpace exports. This imbalance necessitates borrowing from abroad to finance the shortfall, further adding to the external debt burden. The widening trade deficit can be attributed to factors such as India's dependence on imported oil and gas, as well as the growing demand for consumer goods. Furthermore, global economic conditions such as fluctuating interest rates and currency exchange rates also play a role in influencing the size and dynamics of India's external debt. The double-edged sword impact of external debt on the Indian economy. External debt is a double-edged sword for India. It fuels growth and development but poses risks. Foreign capital boosts infrastructure and employment, yet debt servicing diverts funds from essential services. High debt exposes India to global economic shocks. As of the latest data, India's external debt stands $663.8 billion at end March 2024, rise of $39.7 billion from year before. Let's delve into how this debt affects various aspects of the Indian economy. Navigating the labyrinth managing India's external debt. Managing India's external debt requires a multi-pronged approach balancing growth and sustainability. Promoting export-oriented growth reduces the trade deficit and reliance on external borrowing. Fostering innovation and improving productivity enhances competitiveness. Attracting foreign direct investment provides stable funding and job creation. Creating a conducive business environment and policy stability instills investor confidence. Looking ahead, the future of India's debt trajectory. Predicting the future of India's external debt trajectory is a complex task, influenced by a multitude of domestic and global factors. However, by analyzing current trends and potential challenges, we can gain some insights into what the future might hold. India's economic growth, while currently robust, faces headwinds from global economic slowdowns, geopolitical uncertainties, and inflationary pressures. These factors could potentially impact India's export competitiveness and ability to attract foreign investment, putting upward pressure on external borrowing. On the other hand, India's ongoing efforts to boost manufacturing, promote innovation, and attract foreign investment hold the potential to enhance its export competitiveness and reduce its reliance on external borrowing over the long term. Furthermore, prudent fiscal management, coupled with structural reforms aimed at improving productivity and competitiveness, can help mitigate risks and ensure the sustainability of India's external debt. The future trajectory of India's external debt will ultimately depend on the delicate interplay of these various factors. Conclusion: a balancing act for sustainable growth. In the grand cosmic dance of economic forces, India's journey is marked by a delicate balancing act. External debt, while a potent tool for fueling growth, requires careful management to avoid jeopardizing the nation's long-term economic health. As India continues its ascent to economic prominence, navigating the complexities of its massive external debt will remain a paramount challenge. By prioritizing sustainable growth, strengthening its financial systems, and embracing prudent economic policies, India can harness the power of external borrowing while safeguarding its economic future. The road ahead may be fraught with challenges, but with careful planning, strategic decision-making, and a commitment to fiscal responsibility, India can ensure that its massive external debt serves as a catalyst for progress rather than an impediment to its economic aspirations.